Good afternoon, traders. This is Christian from Hertz Tribeca Trade Group, and today is Thursday, October 22nd. Big event tonight on TV. Yes, it's the Giants versus the Eagles. Very widely anticipated game for the NFC East. We're going for two wins tonight. All right, and possibly a share of first place in the NFC East. All right. Well, we'll see. Anyway, let's turn to the markets. And well, you had a little bit more constructive price action for the day. Some really interesting things that I thought for the day was that bonds are continuing to sell off, and value really outpaced growth, except for some of the newer IPO names, which I think there's a couple of reasons there regarding why the newer IPO names, such as Snow has been very strong the last couple of days. Also, I believe it's Unity Software, very strong too. We'll look at a couple of these charts, right? Because I know most of you are interested in, well, I shouldn't say most of you, but a lot of you are interested in growth names, right? They're fun, to trade and so on and so forth. But it was really about the value names. So I want to talk about that too. Let's start with the overall price action in the indices. The S&P actually went up after the open today. So, what I was I was looking for either this pattern to happen again today, where I think it was 4 out of the last 5 days that the high of the day was made in the first hour. And it looked like we were kind of onto that again today, because as soon as the open happened, we got dragged lower again. This is the sorry, sorry, I'm on the wrong chart. This is the that was the 1 hour. So let me switch to the 5 minute. So yes, we again dumped on the open. We got back to basically the overnight low, and which was in here. And then we managed to bounce, and we bounced. We touched into value, got rejected around there, around like 12 o'clock, and then we kind of managed to power through. So a little bit of a turning of the corner. We'll see if this kind of sticks for tomorrow in terms of, maybe this will get us out of that pattern of just selling every day on the open. There was a little bit of an MOC to buy as well too, so that's a little bit different. But yeah, one day is not a trend, so we'll see how this goes. And if we flip over to the 1 hour chart, we still have, we could still rally a little bit further. And I think, for as painful as this week has been, or tricky, however you want to categorize it, if we at least get back to the bottom of value, I think that's something. We did not take out. I thought that there's a possibility that this version point of control that I've been talking about the last couple of days, I thought that might get taken out in the overnight market. It did not. Again, it would be really cute if we took those levels out and then rallied. So it's still there, really, and we're still caught in the middle, right? So there's no major. Just like one day, one day's price action or activity does not make a trend. So I think it's constructive that we rallied a little bit, but yeah, I don't think there's really anything to kind of hang our hats on. I do think also it's to be a little bit more positive. We did hold this top of value, and you got a hammer bar in here. So again, one day, Rome wasn't built in one day either. But you have to start someplace. So this was good, considering that we did start the day lower and moved higher. If we go back to my spreadsheet in terms of performance, the Qs again just seem to be not where it's at right now. The Dow was stronger. Small caps were the strongest. I want to go over those two charts quickly. Let's talk about the Qs just for a minute, even though this was not where the action was today. We're still holding the top of value. We still have some issues here. We're not above any of the short-term moving averages. There's still a virgin point of control that lingers down here as well for the Qs. So again, nothing really to kind of take away from, especially for the Qs. No conclusions to kind of take away from this price action. Price is definitely below all the short-term moving averages. We're below value, so we'll just have to kind of wait and see for this one. Here's where again, I kind of, go to the Qs first because it's a little bit of the worse. This is better. right? So small caps, right? And this was kind of one of the questions that I had coming into this week was, what were the small caps going to do? And they did make a nice decisive turn higher here. So, and they are showing a little bit of relative strength, right? They're in value now for the week. So again, remember a couple of things that I've been talking about this week is that the major averages back on Monday, right? And I kind of said this was a warning signal in the short term that price broke, right? I mainly talked about that in the S&P. I'll bring this up just to reference. But here was your change in short-term trend, a break of this week's value area, the shaded box, as well as the break of the 200 period moving average. Again, very different than what we've seen in the prior weeks. And if we switch over to IWM, that same thing happened, right? But we're now trying to retake it. So we're at a decision area, right? We're right there basically in trying to retake that short-term trend. So a couple positives here. And if you look at the performance for IWM, it was up 1.7% for the day. So that's pretty darn good, right? And then if you kind of drill into what are the components, what are the major weights of the small cap ETF? It's a lot of financials. So we'll talk about that, and let's swing over to the bond ETF. Right, down 1% on the day, breaking lower. And we spent some time talking about this. I was on Bloomberg TV, and that was the first thing that it was the thing that I thought is one of the things that's most interesting on this tape right now is the breakdown in bonds. So we're down here to the S2 on the daily. So perhaps we see a little bit of support. This is not a major support area. These extensions away from the market web's value area are known as speed bumps, right? That's how I kind of think about them. So we're at this second speed bump, right? So we might see a little bit of consolidation here. Maybe we see a bounce. But if we continue to break, there's not a lot going on down here for a while, right? So if we look at the 1 hour, right, which is also has a S2 Venom extension away. But here's what I'm talking about. Right, we go below 150 because there's really an air pocket if we break. And that would be a decent move in bonds. Also on the weekly chart, we really have nothing here either. Right, all the way down to 144. Now again, there's some things that we can kind of run into. That level. What level did I just mention here? So this is 144. Let's wait for the Virgin point of control. Yeah, that's also 147, around 148, and the daily chart. You don't have you've got nothing basically if we break this this S2. All right, so that's really interesting because and again, I just wanted to show a further out chart. This is a 5-year chart of TLT. We haven't been below that 200 period moving average since the end of 2018. So again, something very different going on here. This was also brought to my attention to what happened back in the last election. Well, we started to go lower going into the election, right, for most of October. And then we broke that 200 moving average basically right in the beginning of November, and then throughout the rest of the year. And equities, if you remember, equities really rallied at that point. So, is that kind of repeating to some extent? It could be. Right, here's 2016. Right, we did dip a little bit. We certainly tested. Markets were volatile around the election time, especially that election night. But then we took off like a rocket. Bonds sold off, equities rallied. So, are we setting up for that again? Could be. We'll just have to kind of watch some of these short-term levels that I keep quoting, and we're not going to miss it, right? So, we'll kind of go from there. Now, of course, we talked for a couple of minutes about bonds. Why are bonds so interesting? Well, because interest rates affect a lot of different areas, right? So if we go over, one of the ones is the banks. So I have, if you've been listening to my videos for a while, or if you've been a member of Tribeca Trade Group, I've basically wanted nothing to do with with banks for a long time. But because we really haven't had much of a catalyst, right? You need a lot of things banks in their simplest form, how do they make money, right? So they make money by borrowing cheaper and lending out at a higher rate, right? So normally they borrow short term, right, with deposits that are given to them, and then they make loans for the longer term, 5-year loans, 10-year loans, and further out. So the steepening of the yield curve helps the banks, right? So that's just basically how a basic bank makes money traditionally. Now, there's a whole bunch of other effects here too, but you could see what's going on here too. This is the first retake of the 200-day moving average since when this whole fallout happened back in February. So there's finally something. If TLT continues to go lower and rates on the long end of the curve go higher, because TLT is a long bond, then this should be good for the banks. So I did play, if you kind of look at some of the trades that I did today, I was positioning around that, and that was the trade specific that I mentioned in and on Bloomberg was US Bank Corp. Just getting over the 200-day moving average here, 4.3%. And yeah, I hope this group kind of catches some momentum and it catches some people off guard, and they have to kind of go into a place that they're probably a little bit underpositioned in, right? So I think notable there. Also, what was very strong today too, helping the banks too, is if they have a lot of loans on from energy companies. Energy's strong today. Still hasn't really turned the corner. XLE was up 4%. So, my view on this stuff is I'm a trend trader, so I don't really get involved in names that are below the 200-day moving average because that defines the trend. But I can day trade things, right? So I day traded a little bit of CVX today. Right? I'm going to be quick for some of the stuff that's in downtrends. But if it's got momentum to it, the advantage is, and if you trade options, the options are not super expensive in some of these areas that are traditionally lower momentum. Right? So that's the thing that you have to kind of take advantage of, right? I know everybody loves to trade growth names, retail likes to trade weekly options and stuff like that, but weekly options in high growth are very expensive in some of these names. This is a easier trade. You could go out, like I did in KRE, which I put on yesterday. And they're a little bit less volatile, right? You've got a little bit more, bumper room because they're not super juiced in terms of the implied volatility in these things. All right, I talked about Tesla yesterday too, just to kind of go over my blotter. But yeah, other moves. Sorry, before I go over my trades. Biotech did well today, which is nice. Biotech's been in the doghouse. Oh, I knew that there was one other thing that I wanted to talk about. So, going back to the interest rates, right? So when rates go up, it's good. It's generally a good thing for banks. What is it bad for, right? Well, the home builders, have been selling off pretty hard this week because one of the things is it's going to be harder to get. It's going to cost more to get a mortgage, right? They're tied to the just like TLT is. Longer term rates, same thing with most people get a 30-year rate loan. Sometimes people get the 5-year ARMs as well, but traditionally, like it's fixed to the long end. So that is the general principle: is that when interest rates go up, it's going to make mortgages more expensive. Most people have refinanced by now, but if you're looking to transition to another house, it's going to cost you more when interest rates go up. So I think that's why you see, the home builders selling off a bit. All right, and so it's going to hurt that. Utilities, which are kind of acting as a little bit of a safety play right now, they're kind of doing their own thing. Maybe people want the safety of utilities going into the election because they seem to not really care about interest rates. But normally, REITs, utilities would be moving down as treasury rates go up because it's a safer place to be in government bonds, right? That's the old relationship. All right, I'm not going to make a comment about whether it's safe to be in U.S. government bonds right now, but anyway, that is the relationship. So yeah, that's the interest rate moving again. I think very notable when you have interest rates moving. So let me get to were there any other things? And again, if you look at the underperformers today, software, so the whole thing is, as a trader, depending on your time frame, but if you're a shorter term trader, again, not necessarily, I don't mean necessarily a day trader, but let's say you're a swing trader, you kind of just have to wait for this moves its way out. Now there's a nice hammer bar there in the software ETF, but it didn't look like this group had momentum to it today. Some recoveries off the lows, but let some other areas participate a little bit. In my opinion, don't fight it. So again, you could trade some of these things for shorter term to participate, even though if value is not your thing. I did want to just bring up that relationship between value and growth. There was also, speaking of that, there was also some calls going up. VTV, which is the Vanguard ETF, saw some November calls go up for around $2, $2.20. Also, IWN, which I'm not sure that this is opening. Maybe it is. That also saw calls. So again, there's ways to kind of play this stuff, right? If we want to look at these relationships, let's see, do I have VTV in here? Yeah, here you go. Here's value versus growth overall. We know the story here. Value has underperformed for a while. But perhaps maybe it gets going a little bit, right? Let's see if I can go back a little bit further. Let's see what it did. Just curious to see what it did last election. Yeah, so that's interesting too. But that was when Trump won, right? I'm not saying who's going to win this election. I have no idea. September to December, value really outperformed, and then since that point, once we kind of got into 2017, growth resumed, and growth really resumed. Right. The other one to look at, if we want to look at small cap, value versus growth. Right. You could see that's actually curling up here. And if we go over a 5-year chart just to see what that did too, same type of thing. So there might be something to that. That was a big move. Remember all the banks? I know this was a long time ago, but do you remember all the banks went nuts for about a month? So who knows? Was that because of what happened with the treasuries, or was that because as I went over in the beginning of the video, that that was the big story? One of the stories was, how far bonds sold off, or was it because Trump had something to do with that? Maybe there was going to be less. People were thinking there was going to be less regulation on the banks, which didn't really come to fruition. But I don't know. It's something to watch, right? And again, as I said earlier, I don't think people are really heavily positioned in the banks. So I will keep that USB trade on for now. I am out of carry, and yeah, we can kind of look at some other trades as we get closer to the election. But that's the beauty of options, right? You could take a shot on something, and the most is that you're going to lose is the premium. So you can size that to your risk preference. All right, so a couple other things. So let me go into the trades. But yeah, the Chevron I traded. Tesla, perfect. Didn't really move all day today. So I covered this iron condor that I went over in yesterday's video. I spent a couple of minutes talking about that. So that's what you want when you put on an iron condor, when you're selling premium, right? Selling premium to me is more of what the house usually wins. right? It's kind of in a casino, right? The house always wins, right? The selling premium is kind of a little bit of the same concept. More often than not, the house is going to win with options. So by selling a call spread, selling a put spread, seeing this thing only move 1%. Again, I don't get super greedy. I don't hold these things all the way to expiration, because who knows, some kind of news could come out in Tesla overnight. But I covered the put spread, right, for 20 cents. I sold it for 260, right? I sold a put spread, so that's a bullish trade, and I sold the call spread, which is somewhat of a bearish trade. I covered that for 50 cents today. I figured that was enough, and you could see my total profit for this trade was $4.25. So this was a really nice trade. All right, better than the Netflix one that we did. And I went a little bit further out with that one too. There wasn't quite as much premium to collect because I gave it a little bit more room, but you know, hey, that's a really nice trade. 425, making money on both the short call spread and the short put spread. Sona was a big name today. Option activity, a whole bunch of short-term calls that went up. Scalped for a little bit. I'm out of about 85% of that trade. We'll see. That's kind of how you play some, in my opinion, how you play some of these things. You take some profits, even though that's a really small profit. But I just, everybody has their own feelings about option activity. On the very last piece of the trade, I'll play for something bigger, but I've already locked in, some small profits in this one. All right, these things get pumped on TV, and hey, if you can make a little bit of money on it, that's fine. All right, and that's it. I really didn't do any major trading in the afternoon. Content with the trades that I have on. Not every trade is a winner. I've got some MSCI calls on from yesterday that are not looking too good, but overall, kind of pleased with the day. I mentioned I would talk about when you look at some software names. Yes, the snow, interesting, as well as if the whole group is weak. These newer IPO names do have a little bit of an advantage, right? They're not in the queues, right? They're not in the IGV ETF, so they can buck the trend, right? If there's selling in the ETFs, right? If there's selling in the queues, they don't have to worry about that. So I kind of think that's a little bit about what's going on. But this Unity software is really nice as well, right? It looks like it's trying to break out. Very, very strong move here. It's going to be testing, testing the recent highs of 100. So, and here's Snow did get up to, I think it just barely touched 300. So, we'll see where these things go. But very strong, and a little bit of a volume increase in them too. Another new name, this ARRY was very strong too. Again, none of these names are in the ETFs. So if there's selling pressure and rotation, odds are these things might escape a little bit. And I think that's what's going on here. All right, guys, that's it for today's video. Again, one day not a trend, but you have to start someplace, and we'll see if we get a little bit of follow through and maybe a little bit less headlines. All right, guys, have a great night. See you tomorrow.